Hello, everyone. Welcome to our Industrial Advisors podcast. You have Bill Condon and Matt McGregor. We're really excited about the topic we have today. We are going to be reviewing the 2021 year and talk a little bit about what 2022 looks like, but excited to talk about 2021 because it's been an incredible year in our region. We've never seen anything like it in our careers, and I think what kind of highlights what an incredible year it is the fact that we did it. It happened throughout a pandemic, right? So what a year in 2021. Matt, give us your thoughts on what an incredible year it was.
Yeah, crazy year. Who would have predicted it? We certainly knew that with all things e-commerce that we were going to have a good year, but 10.9 million square feet of positive absorption. So to put it in perspective, if you remove COVID out of the equation the last couple of years and then average it over 10 years, we were like 2.6 million feet a year on average. So 10.9 million feet is a crazy, crazy high number. Nobody would have predicted that. And certainly, you know, some of the markets that we saw the biggest growth in was Pierce County, and then south of that, we saw some good growth numbers. So if you take out of the 10.9 million, just Pierce and Thurston counties together account for 8.5 of the 10.9, which is crazy to think that.
Well, and I think a really good story that illustrates, those markets is the Big Freddy deal that happened in Frederickson. We were fortunate to do a forward, 3-building forward for, close to 750,000 square feet mid-year, roughly $155, $160 a square foot. If we did that same exact deal today, that would be substantially higher on a price per square foot basis. And rents at the time, when you look at that particular market, mid-year 2021 were, call it 48 to 50 cents. We landed a deal recently at 65 cents on the shell, and now the next deal will probably be with a 7 in front of it. So the momentum in those markets is unbelievable. When you talk about absorption, 10.9 million feet, what's amazing is that momentum has continued. There's roughly 8 million square feet of commitments already for 2022.
Which is crazy to think, 10.9 million feet of absorption and another 8 million committed in the calendar year 2021. Obviously, won't accrue until this year. But that's a crazy statistic to say we're starting off the year, barring any givebacks, with 8 million feet of positive absorption that will absorb this year. That's a crazy statistic. And I'm just going to go back and say, I would not have been surprised if you said, if we started the calendar year 2021, you said, what's going to be the number one absorption area? I would have said Pierce County, right? Frederickson is the new Sumner, right? And that's where development's going on. That's where a lot of absorption's going on. The number that surprised me and what's happening, we'll touch on this a little bit later in the podcast, but the numbers that are hitting in Thurston County, 3.5 million feet, I would have never guessed that. That's a surprise to me. And then obviously, and we'll talk later in the podcast, it's even going further down I-5 south.
Yeah, there's been discussions over the last 10 years about how everything's pushing south and, the whole I-5 corridor is going to be big box buildings, right? And, that was true, but really it became true in this last year, 2021, with that absorption and what we're looking at in 2022. And when you look at some of what's going to be going up this year, Windlock and some of those particular markets, developers now are not afraid to go spec in those markets, where if you looked at that 12 to 18 months ago, nobody would have even considered that.
That's right. Exactly. And then some of our historic great markets are the ones that we're not seeing. They're saturated, but Kent, for example, the greater Kent area, including Tukwila, Renton, the North Valley, as we call it, was 1.7 million square feet. So clearly the market has shifted in a dynamic way, and, huge numbers in areas that I would say most of us were not tracking as part of our core market, even up to 24 or 36 months ago. And now they're not only primary, but they're dominant.
For sure. And when you look at the future and what it looks like, we talked about the commitments, but, there's, 14 million square feet delivered over the last, call it 2 years. There's only about 2 million of that's still available. And then under construction, you got about 4 million feet with about 2 million square feet available. You look at what's going on from an absorption standpoint, our vacancy rates are going down.
vacancy rates are going down, and you're going to see, based on the numbers you just gave, there's no doubt about it that you're going to see tremendous rent growth again, which is crazy to say because rent growth, as you know, up and down the West Coast has been moving almost on a weekly basis. But given these numbers, when you look at 8 million square feet that's coming online signed, current demand in the market, which we're tracking about 29 deals over 100,000 feet that are actively out in the market and touring. When you start to look at those numbers and going back to what you said, 4 million feet under construction, obviously we've got more starting in spring, but 4 million under construction and only 2.2 million available of what has already been constructed, we don't have enough product, and there goes your rent growth.
Yeah, and you look at the growth, call it from 2020 to 2021 and where we're at today, it's gone up as quickly as any kind of year over year that we've seen, and that is going to continue.
That's right.
And it's across the board, right? It's you look at some of the multi-tenant product that we're on that is, call it 20 to 50,000 square feet. Some of those rates are in the 90s, and
That's right.
Deals are getting done in the 90s on the shell.
And 2 quarters ago, those would have been upper 70s.
Correct. And the bigger box stuff, the Frederickson 3-building example is a great example of just that, right? 48 to 50 cents mid-year 2021. We'll do a deal in this first quarter with a 7 in front
That's
of it.
right. Yeah. Outstanding rent growth. Going back to the 2021 numbers, and we can wrap up 2021 from a leasing perspective, CoStar is showing 49 leases over 100,000 square feet in the Puget Sound region, 35 of them in Pierce County. So just again showing where that activity is. And then finally, we'll touch on the investment sales. Hit an all-time record, $1.8 billion. And what about those cap rates?
Yeah, the cap rates, and this is certainly true in Seattle and some of the West Coast and port-centric markets. Industrial is the hottest thing around, right?
That's right.
We've seen now a couple sub-3 cap deals, and that trend is going to continue. You have groups that are already in industrial trying to bulk up even more. You have institutional groups that have not been in the industrial sector that now want to play in the industrial sector. So it's the safest place to put your money. It's where all the demand's at. You have existing demand and new investors to the market that are trying to that are putting even more pressure on investment demand. So certainly from an investment standpoint, we're in uncharted territories.
That's right. We've certainly seen the allocation of dollars wanting to be placed in industrial increase because the other asset classes are not performing as well, right? You've got office, which is starting to do better, but with the work at home thing, there's less of an allocation because that's still an unknown. What's the end game there, right?
That's right, yeah.
So you got that factor, and then you've got the retail that obviously a lot of it has gone into big box and e-commerce, so that's a little bit beat up. So everybody's taken a little bit chunks out of the retail sector that they were going to invest in and the office sector and putting those all industrial, putting additional pressure on acquisitions, right? Everybody's got a pile of money wanting to acquire because those allocations are getting bigger and bigger.
Yeah, and there used to be more of a concern when you talk to these investors on price per square foot, right? Everyone was worried about hitting, being the record at a price per square foot from a price per square foot basis standpoint. Now there's far less of that discussion, and it's, hey, I just need to bulk up. We believe in the rent growth story. We believe in this market. Everything will catch up. So, everyone's very bullish on the industrial side of things.
That's right. Yeah, and I think 2022, 300 a foot north will become the norm.
I
right?
Totally agree with that. So, as we look ahead, right, we talked a little bit about the corridor between Seattle and Portland. What are your thoughts on how that's going to play out over the next 12 to 24 months?
It really, I think we're going to see a lot of growth in that area. Several deals done. I'm talking, big box million footers, 500,000 and up, I should say. And I think not only is it being driven by regional demand, but we are all often subject to what's going on in the Inland Empire and LA and Long Beach. The backups in those port systems, along with a sub 1%, 0.03% vacancy in the Inland Empire, our largest industrial market in the United States. I think it's 1.4 billion feet. With less than a 1% vacancy, there's nothing available, and you've got that backlog of ships sitting there with issues in the port. So I think Seattle has benefited from that. as we have in years past. When they have issues down there, we see 3PLs and other contracts that can be flexible on what port they use come up here, and we sometimes get that business. So I think through this year, because they are so far behind in construction, limited on land, and their issues with the ports, and we have had great port growth in 2021, that corridor is going to attract those large deals. Port of Tacoma is great, no backlog, and right on the I-5 corridor, you can distribute to multiple states from that region. And so I think we'll continue to see growth south of Thurston County.
There's no question about that. And because of the points you just illustrated, we've seen a kind of a demand for land and the land grab like we've never seen, right? And that it continues to push further and further south and really east as well. So we're seeing developers being more and more bullish and taking more and more risk in the sense of they'll go to markets where they haven't gone in the past. But what's interesting to me is, you look at a couple comps recently. There was a deal done in Frederickson at $31 a square foot on a land from a land standpoint, and you know what? That land will continue to go up in that market if you can find it.
Yeah, I think looking at the numbers and the rent numbers, that's a good buy. But 24 months ago, that was probably $8 dirt. Okay, and to that same note, we saw a trade in Q4 2021 in Tukwila. Actually, it's a rent and address, I guess. $78 a foot.
Yeah, North Valley. I mean, that's where, we've always said you can't find any land, right? But really, now when you look at the North Valley, they are very few and far between sites that you can actually build a sizable building on. So we're going to see it across the board, continued rent growth from the North Valley all the way through some of those southern markets.
Talking about the southern markets, we also saw a trade in Q4 in Winlock. I believe it was $750 a foot. I think that number will go north of that when you take into entitlement costs and utilities. But $750 a foot, again, if you back up even 12 months ago, I think that number might have been $250, $3 in Winlock. Right?
Yes. That's a really good example of where the market is today. And the fact that you do have not just one developer or two developers, multiple developers that will go that far. And so that pressure will remain, and that the grab for land will continue, and developers will just have to get creative. Now, we've talked a little bit about going south. Let's talk a little bit about the South Seattle submarket, because it's always an interesting one to talk about given the history there. So what are your thoughts on South Seattle right now?
South Seattle's finally back. It's super active. I would say for several years, even though it had a low vacancy, it just didn't have a lot of movement. And so you had some very good product sitting vacant for a long time. Really, in late 2021, that stuff got absorbed. And now a landlord that I spoke with in the last couple of days, a very large landlord in our market, has indicated that it's the best he's ever seen South Seattle. You got a ton of biotech and general tech tenants. You've got 3 multi-story projects, 2 under construction, 1 about to start, and a ton of demand suddenly. So we're going to see, I think, rent growth that was stagnant there for a while. We're going to see a pop in South Seattle in 2022 for sure.
Yeah, and I think when you really look at those, close-in markets still, I mean, that certainly continues to tie into the e-commerce trend, right? And it's not even a trend anymore, right? Like e-commerce is just here to stay, going to continue to increase. And so being closer in obviously helps that e-commerce market. So e-commerce is going to continue. That's going to continue to drive the industrial demand. And I don't know about you, but I am just as bullish on 2022 as I was on 2021.
It certainly will, and I agree. The overall e-commerce growth will continue this year, especially because we're still dealing with COVID. So, the reports are all showing that the consumers are spending money on goods, not services. And I think a lot of that has to do with not traveling and improving the homes and buying bikes and buying hard goods that obviously are shipped and use warehouses and distribution and fulfillment centers. So I think through this year, I don't think we're going to be out of COVID anytime soon. We're going to continue to see people use their dollars towards goods, not services. And once we see that conversion happen in the future, you'll start to see maybe a little bit of slowdown in our growth, but certainly not this year.
Yeah, all things are a go. Any big predictions that you have for 2022? Obviously, cap rate compression Question will be like, how low do cap rates go?
Yeah, I mean, we're certainly seeing, and we're typically just, a few months behind California, we're certainly seeing upper twos there. So, to stabilize core good stuff with Class A credit. So I could see a little bit of a continuation of compression there. My biggest prediction is, double-digit rent growth again, mainly because of what we're talking about on land and construction prices.
Yeah.
Bill, I mean, you're talking 9 months, to pre-order steel. Kind of get in line. It's hard to get stuff, even for a leveler, right? I mean, you're talking months.
6 months out.
Yeah. And so construction prices and supply chain issues will continue to put pressure on development costs. Developers are having a hard time quoting too far out because of the changing pricing. So you combine that with land, that equals rent growth, right? And that demand's still there. So I predict I'm going to say an 11.7% increase. And then finally, I will say the new norm is going to be 4% annual increases. And we've seen some beyond that, right? That's another huge factor. A year ago, everything was 3%.
Yeah.
For like years.
Forever.
Right?
Yeah. It was 3% forever. And then it quickly became 4%.
Yeah. And now
so
above.
Now, 3.5 is kind of the low end.
Right.
And 4, I think, is more the norm. And we'll see if that pushes to 5 as the new norm. But, we have landlords that do not want to do deals more than 5 years right now because of where they're projecting rents. So all in all, it's been just a remarkable 2021, 2022. It's going to continue, and it'll just be a really fun year to be a part of, and looking forward to it.
For sure. I know your prediction. Seahawks 17-0 Super Bowl. And Russell Wilson stays in Seattle.
Yes, Russ is coming back, and actually 20-0, because if you go 17-0, you get a first round bye, and then you got to win 3 games, you win the Super Bowl. So
good point.
Yeah,
good
there
point.
you go. 2022. Put your money on the Seahawks.
Very good. Excellent. Well, thanks everybody for listening. Look forward to our next podcast, and Happy New Year.
Happy New Year.